U.S. stocks ended the year on a down note Wednesday. The Dow fell about 0.6%, while the S&P 500 and Nasdaq dropped about 0.75% each. However, for 2025, the Dow added about 13%, the S&P 500 climbed 16.4%, and the Nasdaq jumped 20.4%. The major indexes advanced by double digits for the third consecutive year, a run last seen during 2019 to 2021. Wall Street made a stellar comeback from April's lows when Trump's Liberation Day tariff sparked a meltdown in global markets, sent investors away from U.S. stocks, and threatened growth by clouding the interest rate outlook. A rally in AI-related shares drove stocks higher, with bellwether chipmaker Nvidia up 39% year-to-date, becoming the first publicly traded company to hit a $5 trillion market valuation. Dennis Fulmer, chief investment officer with Montes Financial, says he thinks these technology stocks are in a bubble, but it may not deflate for a couple of more years.
This whole year has been sort of what I call a low quality rally where, speculation in a lot of places has won out over profitability and earnings. So I think there's definitely some undeniable signs of market euphoria. That doesn't mean it can't last for another couple of years. But I think what it does mean is that price matters. The price you pay for an investment matters. So, history would tell us that if we're buying the SP 500 at these current valuations, we really shouldn't be expecting to see a lot in terms of returns for the next 5 or 10 years.
Stocks on the move Wednesday included Nike, which gained 4% after an SEC filing showed CEO Elliott Hill bought about $1 million of stock on Monday. And Vanda Pharmaceuticals surged 25.5% after the U.S. Food and Drug Administration approved its drug for the prevention of motion-induced vomiting.